What is up, Waves Capital? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about Tesla's highly anticipated Q2 earnings report that's about to be released and why I believe that this report is about to cause some trouble for Tesla's stock. Okay, so first things first, I want to address the fact that the title for this video is very provocative, right? Tesla to $500. Who could believe such a thing? I do. Okay, so although I personally believe Tesla stock will begin its descent down to $500 following their earnings report, I do want to address the fact that obviously I cannot guarantee this outcome. Tesla stock, for all I know, given the frantic nature and speculative nature of the markets right now, Tesla stock could absolutely rip after earnings. And I will be making the bull case for Tesla stock following earnings in this video as well. Okay, you always want to be able to argue both sides of the debate. But personally, I believe Tesla stock will begin its descent, will begin further reversion to the mean, which is why TradingView is in front of us dating back a few years to talk about that mean reversion that I believe is necessary to take place in order to complete a complete correction. And I will do my best to rationalize from both a technical and fundamental perspective why I'm thinking the way I do, why I'm thinking the way I am, and why my thesis is what it is. Okay, so let's get into it, you guys. As always, we'll quickly go over each of the topics I want to discuss, and then we'll dive into each one individually. Once again, in front of us, TradingView, which we will be saving until the end of the video to talk some price targets. Once again, talk about that mean reversion. That's if you've been tuned into the channel, if you've been subscribed to the newsletter, you would have heard many times. Mean reversion and or revisiting of the initial highs of the current rally or market cycle. Okay, so once again, price targets, we're saving that for last. We have to touch on the fundamentals first. And there are a lot of fundamentals to cover. So first things first, when it comes to articles, I do want to touch on this Reuters article titled Tesla Braces for Earnings Hit, but EV Delivery Outlook is Key. So in this article, we're going to focus on analyst estimates or analyst expectations for Tesla's earnings call. So in this, we will just go over some, again, the metrics that the street is looking out for and kind of the benchmarks, again, the benchmark numbers that analysts, that investors want to see that will ultimately dictate whether, at least is likely to dictate whether the stock goes up or down following the actual reported numbers, okay? And again, the outlook, like most earnings this year, are very, very key, or this season, I should say. So speaking of earnings this season, before we get into either of those, I want to kick off the video right now we will take a look at Tesla. I did include Tesla in this. Take a look at Tesla dating back 5 years, just to put things into perspective. I do have this right next to Netflix's chart dating back 5 years, kind of to really put things in perspective, and this does really supplement this video. And kind of my just, again, furthers my personal bearish argument for Tesla going into earnings, just comparing it to a stock like Netflix. When you look at these two, that looks pretty crazy, right? But I do want to touch on a few pieces from one of the newsletters that I wrote and sent out to the newsletter family this morning, talking about the current state of Q2 earnings season so far, what happened to Netflix, because they just reported a couple hours ago at the time of recording. So touch on what happened to Netflix, why this is different from Tesla, and just give you guys my general thoughts on the current state of this earnings season and where we go from here. Okay, and once again, I will read through the Tesla analysis that I sent out in the newsletter as well. Just summarizes my current thoughts from a fundamental perspective and technical perspective as well, which we will be expanding on as we dive into the charts. But summarize my thoughts on Tesla for you, so I'm not rambling all over the place, because they're nice and composed, because I just wrote them in the newsletter. So read over this, again, expand whenever I feel necessary, and again, do my best to justify and rationalize my my bearish sentiment for you. And keep in mind, you guys, again, I will be giving the bull argument for Tesla following earnings. And remember, you guys, this market's crazy. I'm not going to say that I'm entirely confident that the market will punish Tesla following their earnings. Hey, they could have bad earnings and Tesla could impress given kind of what's going on in the markets right now. But again, we'll be talking through that over the course of this video. So let's get into it. But before we do, you guys, please let me know in the comments down below, what do you think will happen following Tesla's earnings? What do you think of earnings season so far, and what are your general thoughts on the markets? Always interested to hear your guys' feedback and get insight from the Waves family. So I'll see you guys in the comments down below. So first off, once again, let's kind of touch on Netflix's earnings, and trust me, this will segue into my thoughts around Tesla's earnings. Okay, first off, Netflix just wrapped up their reports, and as we suggested in the macro newsletter, which is the one I sent out for this, they did impress. The stock is up about 8% in after hours trading, but this isn't necessarily due to growth. It's more due to the fact that they aren't in a subscription death spiral like they were in their last report. I did think this headline was funny. We're not going to touch on this article again, not going to get into the specifics of this. It's kind of irrelevant right now, but it's relevant in the sense of the psychology of the markets around this earnings season. Netflix only loses 970,000 subscribers in the second quarter after warning of a loss of 2 million. So always under promise and over deliver, right? This is the ultimate This is the ultimate like example of under promise, and I mean, they didn't even deliver. They severely under promised and just under delivered. So similar to the banks, I think that this report could be providing the markets with an even greater sense of false hope. Netflix has crashed significantly harder than most mega caps over the past few months, so it's no surprise that a company within the notorious FANG collective, which is Facebook, Apple, Amazon, Netflix, and Google, is seeing some relief following a not so terrible quarter. To put this into perspective, I'll attach 5-year charts of both Netflix and Tesla below. Okay, so again, Netflix over the course of this correction, that's crazy seeing those November highs at $700 to where we were just a couple of weeks ago, just a week or two ago actually. I mean, Netflix has pretty much erased its gains from the past 4 to 5 years, which is crazy to think. But Tesla, as you can see here, when we go back just to, mid 2019, you go back to the summer of 2019, Tesla was floating around like $50. They were in mid double digit territory. And the fact that we're still at 740 is crazy. So Tesla has definitely does have more growth potential, and this is important to preface for Tesla as such a growing company. Tesla definitely has more growth potential ahead of it than Netflix. Like, they can scale their business in way more ways than one. Again, you guys, I know they have the solar aspect of their business. I know they have the AI, the tech side of their business. I know Tesla is a multifaceted company, okay, with a lot of growth potential moving forward. But right now, the reality of the situation is, and again, this macro is punishing. The reality of the current state of Tesla is that they derive all revenue from their car sales. And the car market is highly competitive right now. I don't know if we can do a little quick example here, but this is perfect. So as I do research, every freaking every ad that I see on any EV blog or even these market blogs talking about Tesla is advertising other electric vehicles. So the market is becoming more saturated than ever. The consumer for this type of luxury good, which Teslas realistically are, there's a high correlation between luxury goods like whatever LV Dior stuff and Tesla, and those are lacking right now. And it's evident that this consumer, the consumer of Teslas, is not as eager to maybe making some of those buy orders like they were in recent quarters. Okay, so obviously included Tesla going due to the fact that I'm bearish going into earnings. And again, just look at the fact that look at this chart. This looks like a crazy altcoin, if I'm being honest. But and again, Tesla has come a long way. Tesla is a far more competent and superior company to what it was in 2020 even. But this still has a lot of mean reversion to complete, in my opinion. And once again, we will cover that in the charts after touching on a little bit more fundamental analysis. So let's cover again my write-up on Tesla. I will voice again, this is a little bull case. I will voice my one concern around Tesla popping following earnings, and that is simply the fact that the markets are feeling optimistic. When there is clear macro momentum, the content of the earnings report itself doesn't matter all that much. When times are good, good earnings are great, and bad earnings are good. When times are bad, good earnings are bad, and bad earnings are awful. Times aren't necessarily good, but they aren't feeling as quite as bad as they have in recent weeks. That said, I stand by my negative sentiment given all of the objectively bearish fundamentals we've covered over the past few months. Lower deliveries, again, that Shanghai issue, employee layoffs, and Elon himself saying that they're having another tough quarter. On top of that, he called his Berlin and Austin factories, new gigafactories, cash furnaces, which we will cover in this article a little bit. But I'm excited to see what plays out tomorrow. Either way, at least we will finally have an answer. In the case that earnings do disappoint, I'm not going to talk about the short term. We'll save that for the newsletter right there. And you guys can see it a little bit, little teaser. But I'm looking forward to potentially using some of the profits from those puts to double down on some of our favorite calls and small cap positions. So even though I am bearish on Tesla, even though I do have put options on Tesla, full transparency, of course, I do also have a lot more positions in the portfolio, a lot of call positions on some of our favorite growth names that have been performing very, very well over recent weeks. And just because I'm bearish on one stock, because again, it looks incredibly overextended relative to the rest of the market, doesn't mean I can't be bullish on other players within the market that I feel have gotten overly beaten down. So if you want to know the exact puts, how I'm trading Tesla, if you want to know the exact calls, how I'm trading my longs, my favorite stocks in the market right now that have been performing pretty well. I'm going to record a video, of course, on crypto equities right after this. But if you want to know how I personally trade on a day-to-day basis, you want to join Waves Capital, you want to join the winning team, check out the first link in the description box below. That is going to be $15 a month or $40 for every 3 months. That's completely up to you. I'll let you decide that. You can always unsubscribe, give it a shot if you don't like it. Which I don't think will be the case. You can always unsubscribe, but I recommend you guys check it out. I do a lot of work, of course, on top of my complete portfolio breakdown. I do send out the 3 newsletters that I write every single day. This is the 3rd newsletter, you guys. I write a macro analysis, I write my trade alert, and then I write my price targets newsletter where we go over a whole bunch of charts and whatnot, real-time data. So if you want all of this, again, just $15 a month or $40 for every 3 months, go check it out. That is the first link in the description box below. But if not, no worries at all. Your loss. Let's get into the rest of this video. So Tesla braces for earnings hit, but EV delivery outlook is key. Let's go over a few analyst expectations here. Okay, what does the street want to see in the numbers? Tesla's second quarter results on Wednesday are expected to show the strains of China's COVID-19 lockdown and protracted startups of new factories. Investors want to know if the end of the year will be much better. Tesla started layoffs following through on a plan by chief executive Elon Musk, who said he had a super bad feeling about the economy. Again, quote from Elon himself, super bad feeling about the economy in June. He also said that Tesla's new factories in Austin, Texas, and Berlin are gigantic money furnaces, which are losing billions of dollars. Okay? And on top of these two, he did also say, and we've covered this on the channel in the past and plenty of times in the newsletter, in a leaked email a month or 2 ago, Elon said specifically they're having a very rough quarter. So that in itself, if Tesla doesn't disappoint to some extent in this, then I don't know what's going on, honestly. So, add to that concerns about growing competition from electric vehicle makers and COVID-19 in Shanghai. Whoa, my bad. COVID-19 in Shanghai. Home of Tesla's China's factory and its suppliers. And again, just let's take a look at, they don't have any right now. But once again, the EV ads on this site, on every site, just show the amount of competition that Tesla's going to face. I don't doubt the fact that Tesla can remain the kingpin of the EV markets. They will still lead in terms of individual vehicle sales as far as EVs, electric vehicles, are concerned. But again, you guys, not everyone wants to drive around with the same car. That's like so common sense to me. People like Teslas now because they're cool, because they're fringe. But when everyone has a Tesla, they become significantly less cool. Okay, and that's just the nature of trends. Okay, so Add to that concerns again. We just read that the expectations are very low for the quarter, and the key to this is what they're going to say forward, because expectations for the second half of this year are very strong for this company. And this is where I do think they're going to falter. I do think that demand, like Tesla art, definitely does have, in terms of like pre-orders and stuff, they do have significant demand, but their demand has gone so parabolic and just, again, hype. This is a hype cycle. Tesla is a hype cycle stock and company, honestly. Demand will slow, again, as better looking EVs come out, as more fringe EVs come out that are more attractive, more appealing, and maybe perform better than Tesla's. It's only a matter of time before we see demand relative to other car companies who are making EVs dissipate. Okay, so analysts expect the electric vehicle market leader to report second quarter revenue of $17.23 billion, an 8% decline from a record high achieved in the previous quarter. That would be surprising. Analysts also expect an adjusted profit of $1.86 per share, a 42% slump from a year ago, according to Refinitiv data. So, again, you guys, revenue would make sense for it to stay on track. They just, all the pre-orders and stuff still. If there is recessionary behavior from an economic perspective, which I do think is going to come, that might take another quarter or two to actually catch up. But the profit is what a lot of people are going to be looking at. Again, those forward-looking statements are very critical. And yeah, I'm excited to see what comes tomorrow. So once again, not going to go over the short term. I don't really want to. Yeah, we won't even zoom in here. I'll save that for the newsletter and stuff. But long term, I want to justify that $500 price target for you, and maybe a price target that could go even lower. But let's start with 500. So once again, reversion to the mean. What does reversion to the mean mean? What does reversion to the mean mean? Pretty much just means that once a hype cycle pops, again, once a bull market tops out and begins its correction, way more often than not, and I've built my entire trading career for the most part, like the far majority of net worth that I have to this day has been built off of playing hype cycles and off of playing momentum and emotion and catching tops. Not obviously never perfectly catching tops, but doing my best to recognize the emotional top and capitalizing on for the ride up. But anyway, again, with all hype cycles, with all bull markets, with every correction I've seen and experienced, and a lot of times ridden in like my common share portfolio, all the bubbles, all the ups and downs, when you get a correction, it's very rare that the correction is complete until there is a revisiting of one of the initial highs of the rally or a reversion to the mean. Okay, so what would be the first official reversion to the mean for Tesla? That would be the September 2020 high, which from its February 2020 high would still be up 150%. So where Tesla is sitting today at the time of recording, $740. Tesla is up from its pre-pandemic high, from where we were just 2.5 years ago in February of 2020, is up 275%. Pretty crazy, right? Especially given the fact that the rest of the market is getting pretty close to those February 2020 highs. Now, where are we from where we were 2 years ago, okay? First rally off those COVID lows, off those pandemic lows, liquidity just injecting out the wazoo into the markets. July 2020, 2 years ago. We are still up from that July 2020 high, up over 2x, all right? So this is officially a reversion to the mean. This is the initial high of Tesla's current bull market cycle, okay? And now, given everything we've been talking about, all the macro factors, all the economic headwinds, I do think it's likely that Tesla does actually revisit this July 2020 high at some point, which would take us down to $360. Is a revisit to the 2020 pre-pandemic high possible at under $200? Possible. I don't think that's likely at all. Is a revisit to the July 2020 high likely at $360? Given Tesla's growth, I don't think that's super likely. I'd put maybe like a 25 to 30% chance of it coming down to 360. At some point in time, if we get a black swan, I absolutely can see that happening, or something goes wrong with the company from a fundamental perspective. Elon steps down as CEO or something. I can definitely see that happening. But do I think Tesla can see $470 to $500 to revisit the September 2020 high, which again, from just those pre-pandemic all-time highs, which are still way up after rallying significantly, which is still up 150% from where we were before the pandemic. I think that's absolutely possible, and I think that is necessary for Tesla to officially complete its downtrend. Okay, so 470 to 500 is going to be my summer target for Tesla. Can we go lower? Absolutely. Do I think we'll go lower? I do. But again, you guys, that's just the nature of the markets. That is the nature of cycles. Do I think after we revisit some of these lows, we'll start ripping back up? Do I think Tesla can break $1,000 again? Absolutely. Do I think it's going to take a lot of time like I do the rest of the market? I do. Okay, so that's the video, you guys. Please let me know what you think about this. If you think I'm onto something, or if you think I'm an absolute idiot, let me know in the comments down below. But of course, rationalize your statements and explain your reasoning. So I'll catch you guys downstairs below. Again, if you want to know how I'm trading my personal portfolio, the Waves Capital portfolio, winning teams portfolio on a day-to-day basis, first link in the description box down below. And I'll see you guys on the inside, and I'll see you in the newsletter. Until next time, always remember, take action, make waves. Peace.